We've got a crypto markets update with, as we see $1 billion in liquidations triggered, markets tanking. Joining us now to discuss is Gritt Trakulhoon, investment analyst at Titan. Hi there, Gritt. Thanks for joining us. So just taking a look at the markets right now, what do you think was the catalyst for all of this? Because people were pretty happy with the $30,000 support level. Many were saying that this was the bottom, but clearly we're not over yet.
Yeah, I think the 28.5 to 29.5K zone was, considered a major support level for Bitcoin, because it was the level that held Bitcoin price for the last 1.5 years. And at the time, people were thinking that, hey, maybe inflation is peaking. But then when the numbers came out last week, all hell break loose because it's such a major support. A lot of people leverage along positions, have either liquidation or stop loss just right below that zone. And then, exacerbated by the Celsius fiasco, it just got violent really quickly. And yeah, you saw what happened. So we are at 22K now. But yeah, I think the majority is probably driven by macro, small bits driven by Celsius. And I think right now, obviously, the market is repricing everything, right? Based on the new expectation of the rate hikes. And this shift in pricing has clearly impacted not just crypto, but all, overall risk sentiment. And, basically the Fed need data to deteriorate before having incentive to pivot from their very aggressive hawkish stance. And so right now, bad news is good news and good news is bad news. And I guess right now, we just have to wait to see their forward guidance this week. Yeah.
Well, Gritt, I mean, you mentioned the Fed and they are having, their 2-day meeting starts today. Widely anticipate to have a 50 basis rate hike, point rate hike. Lawrence thinks it could be even higher. What are you watching out for?
I mean, right now the market is giving a 90% probability that the Fed will deliver a 75 basis point hike on Wednesday and 84% probability in July. So there's I guess you have institutions even flip-flopping entirely, and now they're saying instead of there's a potential surprise downside to 50 basis points. Now there's a potential for a surprise upside to 100 basis point. And so, yeah, in the end, I guess we just have to wait to see what they say, because right now the market's, kind of nervous about all the uncertainty, right? Yeah. And not only that, European rates are also repricing for much more hawkish ECB. So everyone is, nervous. So to speak.
Obviously these big macro questions have had an incredible effect on the price of crypto. But for the retail investor, and those are people that you would know a lot about, do you think that they see the likes of Celsius and UST just a few weeks ago, and are they more nervous than they've ever been going into this, primarily because things like UST and things like Celsius might be a little bit more complicated than what the retail investor was expecting when they started buying crypto? Do you think that that's had an effect, a chilling effect on retail's enthusiasm for crypto, and that it's something that could last for a while?
Well, if you look at all the on-chain data, basically retail sentiment has been dying, in a straight downtrend for weeks or months. I think definitely things like UST or Celsius definitely, amplify the damage. And all the fiasco about stake it, depegging, basically Celsius, they hold about $10 billion in their assets, right? But because they're a C5 company, we don't really have a transparent picture of their financial position. But, people do try to track their wallets on chain. And so we managed to track about 1.5 billion positions. So we can see everything on chain, right? That liquidation price and whatnot. And you can see that ETH holding right now, at least on chain, they only have about 30% in liquid ETH. The rest is in, stake in ETH2 or, in stake ETH. And that stake ETH is kind of illiquid in a way because they hold such a big position that, much bigger than the liquidity pool on Curve. And so if they're going to have to liquidate it to meet clients' redemptions, that means like a lot of, losses for them. So right now, yeah, it's an interesting position for them because on one hand, you're not going to get like a scenario where they spiral to zero, right? Because stake ETH works in a very different mechanism. Like, eventually, once the merge happens, once redemption happens, you can always, redeem it back 1-to-1. So right now it's more about short-term liquidity risk, smart contract risk, and so on. But yeah, obviously, already you can see on chain that they do leverage that position. So, depending on how much leverage they have, the higher the risk is, and that's what we're seeing. Yeah.
Which do you think is the dominant force behind the sell-off in crypto? Is it retail or institutional?
I mean, institutions. If you look on chain, at least the whale holdings just have been like selling off. I think they accumulated a little bit back in like April, and now they're just being straight like selling off. And you can see also like some report like CoinShare Digital Weekly Report. I think like net outflows, especially on Ethereum.